As my colleague Alicia alluded to earlier, the rand seems to be chasing that 732 level to the greenback. We're sitting at around 729. To what extent did the State of the Nation address last night result in some rand weakness today, or is it just really because we are starting to see dollar strength on the global front?
Good morning, Eleni. I think the State of the Nation had very little impact on the currency. I think it was exactly that. We saw the dollar strengthening across the board, and obviously the rand fell victim to that. And the rand is also weak on the back of weaker emerging market equity markets. We've seen that for 6 consecutive days, equity markets within the EM space have sold off. And I think that's part and parcel of these growing inflationary fears that we're starting to see mounting across the globe.
Let's touch on the State of the Nation, and we chatted a little earlier off air. You were talking about some of the comments made by leaders after the State of the Nation with regards to jobs and job creation. Anything that stuck out for you?
Yeah, look, obviously there was a clear push yesterday for increased job creation, but at the same time there was also a push for protecting the worker. And we know that South Africa has already got fairly rigid labour laws, so it's going to be very difficult to manage those two opposing forces. If we want to stimulate jobs in South Africa, we have to create the incentives for corporate South Africa to actually hire people, and hopefully we'll be able to get that right going forward. You know, at the same time, not exploit workers, but we need to make it more incentivized for the employer.
Michael, let's touch on the manufacturing and mining production data that was out yesterday. And again, employment being a very big issue for both of these industries. Let's start off with manufacturing. Considering that it surprised to the downside, it slowed to 0.2% year on year in December, compared with an increase of 4.6% year on year in November as well. It's quite interesting to look at the PMI numbers, and for January, we'll hopefully see a much better manufacturing space.
Well, let's hope so. The PMI tends to be a fairly good leading indicator for the manufacturing figures, and let's hope there is an improvement going forward. We are fairly constructive that there will be an improvement from those December rates. Obviously, December is a seasonally slow month, but when you're talking about year-on-year growth rates, you know, the seasonal factor is stripped out. So there is some underlying weakness there, and we're hoping for an improvement. And it was heartening to see in last night's public address from the President that they are creating those initiatives for the manufacturing sector. So clearly it's a sector that employs a lot of people, and it has been struggling as a result of the global downturn, and probably as well as a result of the strong rand environment. So hopefully those tax breaks and those initiatives from government will help that manufacturing sector to recover through 2011.
Michael, a little earlier, also just looking at the fact that the Egyptian crisis is still ongoing. President Hosni Mubarak saying he's not going to step down until September. We've got the markets in Egypt reopening on Sunday. In the midst of all this tension that is still ongoing, is this the market opening, the markets coming to the fore once again, going to perhaps give us an indication of the risk aversion towards Egypt, and perhaps have a contagion effect to the rest of the emerging market space as well?
No doubt, Eleni. I think there's a lot of jitteriness out there in the marketplace. People are concerned about how this Egyptian situation is going to unfold. The authorities have obviously closed the equity markets. They've been shoring up the currency, but the true test will come when those equity markets open. And if we see a flight to quality, it could very well bring about a renewed bout of risk aversion. In the background, we've still got those lingering debt concerns in Europe, Portuguese debt not out of the woods, and then we've got these mounting inflationary pressures. So we think that risk aversion is probably going to remain on the increase, and that of course doesn't bode well for our currency.